Okay, and welcome back after the break. And we will now move onto the last section of today, which will focus on the capital markets and stock exchanges, and then we'll also move to sustainability reporting and disclosures. Very interesting, a very relevant topic for businesses and for sustainability in business. I see still some people coming in, so I was going to say take your time, but don't take your time and hurry up in. And we can maybe slowly start the section. So I will actually let you introduce the speakers, but I will gladly introduce you. So the next discussion about the stock exchanges and capital markets will be moderated by Corina Murafa from RoSIF, which is Romanian Sustainable Investment and Finance Association. So I'll give you the word and then you can start.
Thank you very much. Let me just bring my co-panelists on the stage so we can kick it off. You can, yeah, it's fine. Maybe you can go there.
Where?
Okay, let's do it like that, yeah. Sure. So I'm glad that we are uniting the eastern and the central part of Europe, truly, in this panel. So we really make it the CEE. I'm from Romania, and our panelists for the conversation are from Czech Republic and Hungary. We have with us Peter Koblic. I hope I pronounced the name correctly.
Yes.
The CEO of the Prague Stock Exchange, and Richárd Végh, the CEO of the Budapest Stock Exchange. To talk with us today for half an hour, hopefully we're going to make it as engaging, as interactive as we can, TV-style conversation on the role of stock exchanges in promoting and advancing sustainability, because they've been advancing quite some interesting things in their stock exchanges. I wish we had some similar movements in the Romanian stock exchange that we at RoSIF are scrutinizing against ESG performance and compliance and criteria and so on. So without further ado, let me kick it off with Peter, because I know that at the Prague Stock Exchange you've just released your ESG guidelines, and if you can share with us a little bit on what impact you hope the guidelines will achieve in the market.
Okay, thank you very much for inviting me, and a warm welcome to everybody to Prague. ESG guidelines, yeah, we work on that with EBRD and Deloitte as our partners on this project. It obviously have been initiated by the new rules, which are now approved around the ESG topic. And I would say the major aim, is that many companies on markets, especially smaller companies on the market, which is the case of the exchanges in CEE, would have the ESG reporting as an additional expensive and time-consuming load. And what we would like to do is to make this workload for them and cost as little as possible, and being able to fulfill and to comply with the ESG requirements as easy as possible. So what we are trying to help them are these guidelines. We are sometimes nicknaming that as a cookbook, basically how they should follow the rules and regulation and reporting rules. There will be on our pages some examples, how they can do the report, which I hope going to be self-explanatory, and I hope going to save those companies costs through the whole process.
Do you also have some capacity to assist them, to actually work with them, hold their hands in these processes, which are sometimes complex, as you say? Or do you hope that the document is going to be self-explanatory and that they're going to make it on their own?
Well, we definitely could have some capacity. It's not so much in a time pressure, so that there definitely could be some consultation, from our side. It's not like that we would have a person who would be 100% dedicated, or 2 persons, or whatever team that would be dedicated of helping the companies, to cope with the ESG requirements. I think that's actually the business of the advisors. If there is somebody from the big advisors, being that Deloitte, EY, PwC, that they all have enormous capacities dedicated to ESG, as I find out. I have to say, it's probably, if we have a conference or if we have a project, for me, equally important topic, and this is the pensions in Europe for future, that will be tremendously difficult to receive budget for this, although I think it is quite important thing. ESG, everybody's coming. Oh, we have a budget to spend. We have the budget to spend. Can we do some project? We have a pile of money. I have to spend it on ESG. So there is definitely a situation where, okay, there are so much budgets, for the ESG. Let's use it for good of the companies, of the users, of the investors. So this is now the time when it's hot and when we can actually do something and prepare our companies, either us or the advisors, to comply with the regulation.
Let's hope that's going to be the case. Moving to Hungary and to Richard, you at the Budapest Stock Exchange have released similar guidelines a little bit earlier in 2021. What's been the effect so far? Has it driven cost savings, as Peter hopes to achieve here in Prague, or was there a different effect that you've noticed in the Hungarian market?
Well, actually, the core of our strategy as the Budapest Stock Exchange is that we want to help the Hungarian mid-cap companies to start to use the capital markets. And most of our services are according to this principle. And also with sustainability, we used the same principle. We looked at what we can do as a stock exchange to help our issuers, mainly the mid-caps, because the blue-chip companies, they started to report from themselves the sustainability data years before. So those are the ones who can really teach us how to do that properly and in a very good quality. But for the mid-caps, I think we saw that there is a role to play from the stock exchange. And it was confirmed. So yes, we published this ESG guide in 2021. And we received from the companies, from the listed companies, kind of a roadmap, a timeline, according to which they plan to move ahead on this road. And this guideline describes or explains to them different types of roads, types of actions that they can really move ahead. So actually the awareness of this topic, that they at some point they really need to publish more data on non-financial information, was really raised because of this publication of the guide. We then organized some forums and professional meetings, and as also Peter said, I can confirm that the consultancy firms really started to focus, not because of our guide, but it happened more or less at the same time, so it reinforced each other's effort. And for that reason, I think, that we were in a good position to somehow facilitate the sharing of knowledge and raising the awareness of this topic among the listed companies, mainly the mid-caps.
Is there a monitoring system that you put in place to sort of see how's it going, how they're taking the guidelines, if they're genuine in the sort of reporting that they're making, if the reports are accurate, or even if the guidelines are complied with? Do you have some type of system in place, a mechanism?
So it's important that it is not a compulsory rule. It's more like a guideline we are suggesting to do that. And then we ask the issuers to really share with us their time frame, their timeline, what their plans. And then we will check back whether they progress according to it. But it is not because it is compulsory, it's because just for having the knowledge and maybe have discussions around this, if somebody is progressing more quickly or maybe a little bit lagging behind. So it's a useful information for us as well.
And do you publish this information? Do you release it to a wider audience, how companies are progressing against the guidelines, or do you just keep it to yourselves and then you discuss it internally with the companies, with the listed companies?
First, it's internally, but what is also happening, we have a so-called sustainability committee on the stock exchange, which is comprised of issuers, investors, some regulator, government officials, so it's a good mix of knowledge, and there we can discuss these kind of topics, also related to the guideline and how the different companies facing different problems in the reporting of sustainability data.
Okay, thank you very much. We'll get back to the problems in reporting, because I think that's a pain point that many are struggling with. But I want to get also a bit of a European picture, because I know that Peter is the president of the Federation of EU Stock Exchanges. So I would assume that similar developments have taken place in many other stock exchanges, and the ESG attention everywhere has been growing. Could you give us a little bit of a glimpse of what's going on at European level? Are these efforts aligning? Is there cross-pollination, learning between stock exchanges, between different issuers on different stock exchanges, and so on?
Absolutely. We have in the Federation of European Stock Exchanges, we have a working group. And we are of course focusing on this topic. That's one of the topics where I have a feeling exchanges doesn't compete so much with each other. It's a rather mutual effort, to look what the others are doing and do the similar thing. It is. I don't feel that it is a field where we would compete with each other, to make it more viable or easier or more difficult ESG or more transparent, whatever. Everybody somehow try to do the best effort, look what the others are doing, try to fulfill the requirements. The same way we are not competing on financial reporting. There is one IFRS, everybody's reporting. We are watching the companies. We are trying to make the information available to our investors. So the ESG is the same way, and therefore. Of course, we in the Federation are commenting on all the new rules and regulations which are coming from European Commission. From our point of view, would we think it's reasonable and it's not reasonable? Frankly, I have to say, so far the impact of the ESG and sustainable investment is mostly on the paper. It's like I don't see and we don't see so many investors who are would be moving from traditional way of investing in order to make money long-term wise. Everybody understands that the ESG is a necessary part of it. So everybody would like to see that the companies they are investing in have ticked off, they have the report, whatever. But I meet through my career. I was on the other side. I was an investment banker, before I joined the exchange. And even now, I probably personally didn't meet the investor. He would be saying to me that their investments, most important thing is the ESG. Yeah, because the investors are here, the pension fund managers are here to make money. So the ESG is like a tick. The tectonic change, which could be in the future. I'm not saying I would love to see it. Actually, in the contrary, but the big change would be if there is more ESG agenda into the benchmarks, into the main benchmarks. So far, investors and vast majority of the investors, and majority of the investors in the world are not passive investors. They are investing by the benchmarks, by the indices. And those indices, okay, there are companies who fulfill their reporting, but they are not constructed as ESG indices. The DAX, the Caron, are still indices as they were 30 years ago.
But climate change is fiduciary risk at the end of the day. If you're taking a look at a long-term horizon of investment and return and so on, if you're going to have stranded assets but short-term gains, then somehow if reporting and accounting doesn't take into account these new metrics, then we're failing to align incentives, because that's what I hear from you, that the incentives are not aligned. The profit maximization not aligned with the ESG standards, if I hear what you're saying. So how can this shift be possible if you're saying that that's the only way of aligning incentives?
The thing is, if it's the shift we want to see, we still are working in some kind of legal status. There is still a rule of law, and rule of law for managers like myself usually we are responsible to our shareholders in order to long-term maximize the profit. That's basically written in all the corporate laws in Europe. I don't have in the corporate law in Czech Republic that I should be climate neutral. I'm responsible for my shareholders to maximize the profit. If that is including that long-term view, I do something positive on the ESG side, fine. But I'm responsible based on the corporate law.
But things are changing for other entities. I was reading an article recently that over half of the national banks now have an explicit mandate to address climate change. So if it got into the mandate of the central bank, then I would imagine that it can move towards corporate law as well.
I didn't see that. I didn't see even slightest intention that there would be somebody changing the German, Czech, or British corporate law, which is 300 years of development of the corporate law, starting from the Roman law, basically, that there would be something soft, which would be saying, okay, there are some cases based on something, which is called ESG agenda, where the managers of the company don't have as a main duty to preserve investments and maximize the profit for their shareholders. That would be the biggest change in that would be the change of the capitalism, which I cannot frankly imagine, really. And the same way as the pension fund managers. The pension fund managers, I maybe could have a good feeling that my pension funds do care about the climate change and about those kind of topics. But when I'm deciding, what kind of pension funds I want to see and what is the profitability of my pension funds, I look at the number. Is it 6 or 5% of the income?
And up until the number doesn't incorporate in a mathematical way, one way or another, these things that we're talking about, you still are going to look at the number, right?
Of course, everybody looks at the number, because that's a calculation where your pension is going to be calculated at. It's like, okay, what you can take? You can take part of this money and spend them on something which is, I would say, more green or sustainable investments. This is your decision. But there are actually pension funds on the market, and they are competing with each other. And the competition is, they are all fulfill the ESG requirements. But in the end of the day, they are investing, and the competition is who brings more money to the future pensioners. And I don't really see a chance that this could be dramatically shaken. You have to compare metrics and not soft and hard numbers.
If I may also intervene.
I really wanted to come to your perspective as well, but just to let our audience know that they can also ask questions, and that I'm going to be moving to them. Please, what do you think about all of these things?
There are different dimensions of these questions, of course, and the transition from a more efficient energy production, consumption, and so on. So this whole transition requires a lot of financing, and the financial system has a role to play here, stock exchanges as well. We at the Budapest Stock Exchange think that we would like to take part of it, as big a part as our role in the financing of the economy and the real companies are. So for that, what we can do, we can, of course, accommodate on our trading systems, platforms, green securities. So what happened, we listed a number of green bonds from the government. Hungarian government issued several green securities, corporate bonds. We have several green corporate bonds and also on the mortgage bond side as well. So this is one part. We try to give them possibility to list and also the visibility. We would like to increase the visibility of these kind of securities.
And do you think that this progress that you're making is fast enough? I don't know if you were here at the earlier panel, but one of the audience members rose a question to the real estate panel asking them, okay, you are making these incremental changes, but we're heading towards a climate disaster. You are not moving fast enough was, I think, essentially the message. With the kind of changes that you're seeing in the world of finance, and particularly with these bonds that you're talking about, do you think that the transition is fast enough for what we need to achieve as society?
It's difficult to say from my position, to be honest, but what I can say is that it is a quite visible change. So 3 years ago, we had 0 green bonds. Today, we have a relatively nice volume of green bonds listed. So I guess this trend will continue with time. So I think, yes, I mean, this is a decent development. Whether it's from a global perspective, if it's enough or not, it is very difficult to say from this position. The second thing what we hear from the issuers is that on the investor meetings, a few years ago, suddenly, half of the questions started to be related to sustainability, what those companies are planning to do regarding sustainability. So very quickly, from a very niche topic, it became a mainstream topic for the investor meetings for the blue chip companies. So, of course, they then even more started to focus on it. Or I could mention the Hungarian energy company, MOL. In their current and last strategy, the core of their strategy is basically to transform it into a more sustainable company. So they really elevated this question into a C-level, a boardroom, and a key strategic thing. So I think that there are very good positive examples as well, when it's not only a theoretical question, it's not only about the nitty-gritty details of how to report one data or another data, but this is the core of an important listed company. So I think you can discuss this topic from very different dimensions, and I think there are some very positive examples in the region as well, if you look at these from this point of view.
So if I hear you correctly, in contrast to what I heard from Peter earlier, that playing within the rules of the game is still playing the game, what you're saying is that, yes, but we've slightly adjusted the rules and that's making progress and we are heading somewhere. So I think it's more like the pessimist versus the optimist in a way in this panel.
This is investor demand, this is regulation, and of course the individual situation, different listed companies. For an oil company, this is crucial to address this very quickly. Maybe in a different industry, it's not that urgent. So I think, yeah, in the current reality, you can say that this is a very important topic now.
Do you see this mainstreaming of sustainability and ESG among your investors community, the ones that you're meeting, or is it rather a novel topic that's being approached more cautionary?
In our part of the world, usually the investors there are 3 groups of investors. One group are international funds. They are here for 25, 30 years, and there are basically the same names, investing in Hungary, Czech Republic. Those, I don't know, Franklin Templeton, Fidelity, the world, which have some emerging market funds. We are still considered emerging market, obviously, by the index companies. and they either do the active investment or passive investment. So those are those international, usually majority of investments in our blue chip companies are coming from this part. Then there is, let's say, domestic/regional asset managers who are sitting here. They are more focused. They are more hands-on. There is more cross-border investment between Poland, Czech Republic, Hungary, if you want. 15 years ago, there was almost nothing, you know, that there was very few investments. And then there is retail, and retail is usually domestic. We have very few examples that there will be retail investment from Hungary and Czech Republic, you know, almost nothing, you know. The retail are usually investing either in the domestic markets or US, in the big blue chips, in these Microsofts and Googles, whatever. So those are the three groups. Okay, frankly, I meet probably all three groups, maybe not so often as prior to COVID, but all three groups. There is, of course, in the first group, in international funds, there is, of course, ESG agenda, big time on the table. So they are, but they are rather tick off, or they have prohibited sectors. They cannot do utilities, energy utilities, they can do whatever. Of course, all the companies have to have this report. Do they really read it and study it and compare it? Not really, it's tick off, there is a report.
Analysts, we compare lots of reports, in the academic world at least.
Yes, but the analyst, financial analyst of the pension fund, they compare the numbers. They know there is an ESG report, fine, is there. Like, there is an annual report, is there. Yeah? Local funds, regional funds, certain extent, but much less focused on that. They are much more focused on the financials. You know, they know there is an ESG, but they don't care so much. I'm just saying fact. They don't care so much. Retail, never heard anybody whatsoever asking about ESG. Zero. Everybody wants to make money.
Thank you.
They don't care at all.
Thank you, Peter. I think it's important to have the grassroots voice and the you know, like realism, pragmatism on the table as well. There's many questions already there and not so much time to answer them. So let's take maybe the one around preparing listed companies to report on CSRD. What are you guys doing about it? Very shortly. Richard and then Peter.
Yeah, so as I mentioned, we have a sustainability committee, so this is discussed there. We organize forums where we also discuss together with the issuers. And together we did that for small caps and also non-listed entities. We make a pilot project. We have a small cap SME ESG rating methodology that was developed by EY, and we are running a pilot project for non-listed entities for that. And the reason for that is to really realizing that it is not only the listed companies that will be affected, but also the non-listed ones, because they are also suppliers to multinational companies who will then be required to make a due diligence for the whole value chain. What is the sustainability impact? So that's why we started to work also with non-listed Hungarian SMEs to start to, again, raise the awareness and also try to make kind of methodology, pilot database, and let's see what we could use this experiment in the future.
Okay, thank you.
I would pretty much agree. There is one very important thing for us as a managers of the capital market, as a people who are responsible for capital markets. There should be a level playing field. There has been, you know, I've been a member of the high-level working group, you know, who was tailoring, you know, the 27 people who was trying to kind of change the European capital market regulation a couple of years ago, and there were like CEOs of the big banks and whatever. And there has been a discussion what kind of ESG requirements should be for the listed companies. And I was always getting ballistic. I was like, why listed companies? It should be even more for unlisted companies because they are untransparent a little bit more. You know, listed companies are super transparent. And if they are required to have a report, fine. You know, there was a voice from some it was a French lady, I don't know, I don't want to quote exactly. And there was like, we as exchanges should show not only which are the green companies, but paint those which are brown and prohibit pension funds to invest in them. And I was like looking, what are you talking about? You know, so the pension funds will sell them, the price will go down, they will be bought by the private family office and somebody who doesn't care at all about ESG. They will stop to report and they will do their chimneys will go off. So it is like important to have a level playing field that also the unlisted companies have the same, if not bigger load of the information than listed companies. This is very important.
Let me take another question from there, which probably is I like the Slido for the anonymous questions, honestly. It's probably addressed by one of the Czech audience members. How do you believe that the Prague Stock Exchange can make returns without considering ESG risks and without leveraging the sustainability opportunities?
Yeah, I was reading that 3 times. You know, it's a very complex. You know, I was studying mathematics, but this is still a kind of complicated question to answer because I don't really get it. So it is like.
Do you want me to rephrase it?
Yes, please.
So, do you think investors on the Prague Stock Exchange can make money without considering ESG risks?
Yes.
Okay, so that was.
That's what they are doing, actually. So they obviously, you know, if they buy today some, you know. Vice versa, you know, there has been 3 years ago, there have been a great IPO of the Czech company. It's a machinery company producing guns. And half of the investors were banned to buy it. This is the company now who is supporting the freedom of Ukraine, sending them guns. I see it completely consistent with the ESG because they are trying to save Europe from totalitarianism. However, some crazy asset managers were prohibited to buy that one. This, I think, completely weird.
Thank you.
And people made money who bought it. Those which didn't care about the ESG.
We got it. Thank you, Peter. We are at time, but 43 seconds for one last question there. Please, gentlemen in the back, so we can also have some interaction with the audience. Wait just 1 second.
Either
until
speak up or wait for mic.
Yeah, wait for the mic.
Hello, my name is Donatas Ditkus. I'm from GND. My question was on the Slido platform, but I haven't read it, so I will make it loud. What particular benchmarks do you suggest for SFDR Article 9 funds? I know there was a discussion about benchmarks, but they could be, should be, but what particular ones do you suggest?
Peter is yours.
You know, I'm sorry. I'm sorry. I'm the CEO, and that's far too technical for me. We probably had some discussion about the benchmarks, you know, but now commenting what particular benchmarks Article 9 funds.
This is, I can make it.
I know what is it, but yeah. You know, I cannot really elaborate.
Article 9 funds are those funds who have sustainable investment objective. By definition, SFDR specifies what those funds who have sustainable investment objective, this means investing in sustainable assets, it has benchmarked themselves. My question is, against what to benchmark?
How sustainable is sustainable?
Yeah.
I think.
Yeah, the question is good, I think, because we have, as Budapest Stock Exchange and probably for Prague as well, our indices were designed before these regulations. So I think it will be an interesting process how our benchmarks will be aligned with ESG requirements. This is not the fact yet, because as also Peter mentioned, those investors who are right now following these indices don't have a huge demand to transform these indices into sustainability aligned indices. Those ones, the global ones, are using probably the indices of the global index providers which have the specific indices.
And there's super different opinions around the globe about the ESG. And maybe funny story in the end, there has been a European company, which I spoke to CEO on that, and they were the bigger European company, and they were tested by the American, like some California fund, you know, it's usually very much ESG focused. And they were very tested, you know, what kind of what they do, and they're like, oh, we do for this for climate, we are climate neutral, we do everything, and they was doing like, and what you do with this G? I was like, oh, G, fine, you know, yeah, of course we have 1/3 of our board are currently women, and whatever, we have some program of promoting women in our management and whatever, and our corporate governance. I was like, yeah, and what you do about the ethnic minorities? And then he went ballistic, and then he said like, you know what? We in Europe have quite a bad experience from January 1933 till May 1945 in kind of ethnic differentiation, who ethnicity is on the board. So what do you want me to hear? You know, what do you want to say? I have 3 Jews on the board? I think that didn't really work, no, 50 years ago.
Thank you very much. I think we still need to continue the conversations around these topics. Definitely not now, because opinions are still very, very diverse, as you can see, and that's good because humanity is diverse, and we need to sit together and talk about these things. Thank you very much, gentlemen, Peter, Richard, for your contributions. Thank you also for your questions, and I apologize for running late.
Thank you.
Very good. Okay, and I thank the panelists and Corina for moderating as well, and thank you for very, very insightful, really honest discussion on and sharing your experiences as well. And now, without any delay, we'll move to the last panel of the day, focusing on sustainability performance and ESG indicators and how we can measure performance. So I will ask, well, all of you to the stage, but mainly the moderator, Paula Singliarova, who's the ESG expert and visiting fellow at ISFC, so my colleague who will be moderating the discussion, and I will let Paula to introduce the panel. Good.
Good afternoon, ladies and gentlemen, and thank you for joining us for this final panel of Day 4 at CE Sustainable Summit. I'm very honored to share the stage with a couple of esteemed colleagues from Central Europe. So starting with Jana Ružická from Mazars. Then we have Eva Pekárková from ČEZ. We have Richárd, pronunciation from SAP, and then we also have Dr. Helena Naffa from Corvinus University, but she's also a practitioner in asset management space. So the topic of today, as you could have seen, it was the leveraging ESG reporting and rating. And I think it wouldn't be a sustainability conference if we didn't have at least one session on sustainability data and ESG ratings. So this is it. And yes, so I think I would also like to welcome the ones joining us online and encourage everyone to use Slido. We have some questions and theme prepared, but if there's anything you'd like to ask, please get asking on the Slido. Yes, so ESG data, a very big, very broad topic. We're starting with corporates, but we're also going to touch on some of the asset managers. It's a very important topic because what cannot be measured cannot be really managed. So thinking about the current EU regulation that we see, on one hand, we have the CSRD asking corporates to improve their disclosures. On the other hand, we have SFDR asking the financial institutions. And in the middle, we have the taxonomy, which is sort of the dictionary helping us to classify economic activities. So there's a lot that is happening in the space right now. So I guess I would kick it off quite broadly, asking, what is the atmosphere that you see across your organizations and clients around this ESG regulation, and how are people viewing it? Maybe starting with Jana in the consulting space.
Okay. So if I should use only one word, you would be surprised, but it would be relief. And why that's a relief? Because among the people who really follow the ESRS development, and if you remember how wide and detailed the first ESRS standard was before the summer last year when it was proposed to the public consultation, then of course it was really reduced in terms of amount of data and disclosures, and yes, so that's really like the ESG managers in the companies were relieved. But if I should be more specific, when working with our clients, there are basically three groups. One's those companies who still think it's kind of joke, or that really like, okay, it's compliance, so once we will be in the scope, my compliance team will fill it in, and or we will pay a fine, so they really don't care. Then there is a second group of companies who were reporting for many, many years, and they just will continue, they will just update their tables, and they're really confident. And then there is a third group, which we as a consultants really love, and that's people and companies I would call enthusiasts, and they really see this new CSRD directive and the new regulations and as opportunity. So I can say that we are even working with companies and clients who are not in the scope, but they really see that this process of collection of data can be really opportunity for them, that they can learn, and they are really enjoying the process. And that's, of course, companies we love to work. So
encouraging to hear. Yeah. Gerge, you work in a very large organization. How about you? What is the atmosphere in SAP?
Yeah, so just joining to this, or just continuing what we already heard, if I have to use one word, maybe it would be like that companies are starting to take seriously sustainability reporting, which is good. So I think from this point of view, the impact of the regulation is certainly positive. And I also agree with some parts of the categorization. So again, I agree that there is this enthusiast group. So there are companies who have been practicing sustainability reporting or ESG reporting for a long time. And I think that, for example, the CSRD regulation is not a huge change for them. So if you have been reporting on sustainability for 15 years and you have been getting even just a limited assurance on it for 5-10 years, then it will be just an additional project. Of course, you need to comply with a couple of new indicators. EU taxonomy, I would say that's a bigger change, or that's a bigger step. And I would say that SAP is probably in this enthusiast group. It is in this enthusiast group. So on the group level, even though I am not responsible for the reporting, it will not be a big change for the company. But again, there is this other group of companies who have already started sustainability reporting, and we are working with a lot of companies because, you know, SAP is also like a solution provider. So we are helping companies with our softwares in this, and therefore we have a kind of a sense from the market. And in the CE region, where I'm focused and where I have my discussions, what I feel is that for many companies, CSRD is very much in the focus, which means for me that it is a challenge for a big number of companies. But I think it will be a positive challenge. And actually, we just had a discussion yesterday with Helena, and we discussed that, you know, there are a lot of companies who started with ESG or sustainability a couple of years ago. And it's, how to say, from a certain point of view, it's easy to start with it, right? Because you can create a strategy if you have the commitment from the company, from the leadership. Also, you can prepare some kind of a report, even a good quality report if you are using a consultant, and it will be there. But if you see that it becomes a compliance topic and you have to comply with the regulation, then you start to really look into your processes and the details and the organization and what is my coverage. Am I really just reporting on my operational sides, or do I really involve all the 40 subsidiaries that I have? And there come the big questions, I think. And this is the real sustainability reporting, or this is where we are getting closer to the real sustainability reporting. And I think that all these new regulations will help this process, not just to do it, but to do it seriously.
And I think you kind of link to the other question that we were discussing. Can you actually make these reports meaningful? Are they just some sort of tick boxes exercise that you have to go through, and now you have to report because you're mandated to do so by the EU? I don't know if anyone cares to comment. How you actually can you actually make these reports business helpful, not just tick the box?
Yeah. From my experience, I believe that not all data were created equal. So we need to offer granularity. We need to offer information that's, you know, requested or required. But at the same time, it can't be overwhelming. We need to strike the balance, because if it's too much, then you just create white noise and the important disclosures might get lost.
Helena, how about you, looking from the investor point of view?
Right. You're bringing up a very good point. What's the atmosphere around both academia or the asset management industry towards sustainability reporting, or for that matter, how to approach this question? And I think it's very visible that for Western Europe, the US, they have 15 years at least of history going back of developing and enhancing this. And in our part of the world, we're seeing this as a trend in the last 2-3 years. I think the surge in interest was driven by regulation rather than demand from clients. The perception is very different. A lot of people are just trying to cope with the tsunami of regulation that's coming. I think that's a terminology that we've spoken about and heard at this conference. But I think a lot of the market players are saying, well, if we are to do this reporting, if we are to comply, then let's see the value in it, and let's see how we can look at the meaningful KPIs and processes. Because at the end of the day, as we heard from the previous panel, investors are here to make money. How to do it in a way that's meaningful.
And maybe also, again, building up on that, if you go to any ESG conference and ask what is the biggest challenge, I think almost everyone says data. It's always data. But what are sort of the biggest challenges and hurdles to actually implement not just the reporting, make it meaningful, but is it, I don't know, budgets? We've heard a lot today about the resistance from anything that's coming from Brussels. I guess the change is culturally based on which region we are operating. So for you, what are the biggest hurdles in implementing quality ESG reporting and data?
I would say that definitely what helps is support from the top. So really, if this ESG manager or department has full support from the top, the process is much more easier. We are now really experiencing a huge shift how sustainability governance is organized within the companies, while 10 years ago, the sustainability reporting or ESG agenda was sitting at the marketing departments or communication departments, mainly because companies really understood it as a reputational thing. Now they really understand that it's also about competitive advantage, and it can bring more innovation. So we are experiencing a lot of clients where this ESG agenda is moved to directly under the CEO. It's usually called like a strategy department. So here, or also because the non-financial data will have to be published together with financial, sometimes also they move this agenda to the financial department. But the companies or this ESG manager really needs to understand that he needs data, yes, but also he needs to find out like people, or to create his alliance of people, peers who own those data and who will be able and willing to participate. So that's really important. What we are now also experiencing is that this ESRS standard is also only in English, so companies are translating that, and also some definitions are not still clear, and even when you are translating it, you are even creating the new languages, new words, so it's also this what is a challenge.
It is an alphabet soup. I think all of the acronyms that we use today, it does get confusing. What about you, Eva? What were sort of the biggest challenges?
I would agree with what Janka said about strong leadership, strong ESG leadership, definitely. You need someone who has a clear roadmap where we need to go, how we can get there, because it's a massive exercise. CSRD reporting, you can't just go in it and hope to wing it somehow and learn as you go. You need to be prepared for it. So we've sort of stress tested the system this year, the data collection, actually, the whole, system of putting the report together. We've shaved off 1 month from the original deadline to see, how it all works under, more time constraints. But one thing that's kind of like still hanging there, because CSRD is going to hit about 50,000 companies, and there needs to be external assurance. How is that going to work? When everyone, will need to have their disclosures, verified, audited. So I think that, like, the biggest hurdle that we might be facing is actually time. Like, will there be enough time? How do we make, the process work so that we end up with what we need to disclose? It's in the form, how it should be written or reported, and we also get the verification for it, the validation.
Maybe building on this EU, there was a discussion we had with Helena during lunch that all of these rules pretty much apply to European companies. I know there's an initiative of this rules to be adopted in the US-based companies, but when we look at investment portfolios of large funds, the allocation, the geographical allocation is quite skewed to the US, where a lot of these, for example, these rules will not apply just yet. But I kind of wanted to also pivot it to ESG ratings. If we look at all of the data that we're collecting from corporates, there's so many ESG rating agencies now that collect them in the different buckets and then apply their methodology. And what we get in the end are these ESG ratings. Many of you probably came across with them. We have this big guys, Sustainalytics, MSCI, then we have more niche companies, maybe specializing in like physical risk and so on. But maybe coming to you, Helena, 'cause with your investment background, what are your thoughts on these ESG aggregated ratings? Do you use them in investment decisions? Do you use the ratings or maybe the data below? How do you incorporate it in the investment process?
Right. In this conference, we've spoken about the confusion there is about the different rating agencies, and there was a very strong debate about whether we need to standardize those different rating companies or not. I think it's quite common knowledge now, at least among the participants of this conference, is that we have at least 60 rating agencies, and correlations among these ratings are pretty low. But then again, heterogeneous opinion might have value. And what I see from practice is that the large asset managers would purchase third-party data from ESG raters, use them as inputs, and they would have their own internal rating methodologies. So they're not using it as a black box, but rather to highlight. They go down to the granular data, and they're able to pick the ones that they think are important, that they think are credible, and they are able to verify. Because if you remember, the EU regulation does stipulate that as an asset manager, the responsibility lies with you to verify and do the best effort that you can to make sure that the data you're basing decisions on are valid. So the large asset managers have their internal models, apart from purchasing data from several raters. But the fact that there are rating agencies is very useful for the small asset managers and for individual investors, I believe. And here's the role also of not having just coverage of the large caps, because they are the most transparent that we have on the market. But if we look at global financing and where capital is, it's usually with the SMEs. If we look at who are the largest employers globally, it is the smaller companies. And what about the transparency of those? And I think here we heard some ideas that the regional stock markets are supporting the smaller companies in their transparency and perhaps guiding them to help capital markets see the non-financial type of data that they are looking for.
And
can I jump in for a second? Because, and it is not related to my current position or SAP, but actually I used to work for ESG and ESG reporting as well in my career. And one of my previous companies, one exercise that we regularly did, it was a listed company, and I can recommend to everybody who is working for listed companies, is that we went to investor relations and asked them to please check, in the list of the investors or the who are in the books, who own shares from that company, just to please screen it, like if there are some ESG funds. And the funny thing was that there were many of them. Because I agree with Helena that, of course, they are using their own methodologies. So maybe it will not be, like a fund that has the name of any of these ESG ratings, but still, if it is an ESG fund that invests in the company, it will be in the name. And you can even see how much is the ESG-related ownership of your company, and that turned out to be a super useful argument, even with discussions with the top management, because these are the things how you can explain to the management how ESG and ESG investment creates or can create value to the company. And even this was one of the topics, by the way, that could reach the board level, which is not always easy to do, or at least 5 years ago it was not super easy to do. And also this a bit connects to what you asked about the valuable data, that yes, this is, by the way, a downside a bit, I think, of old regulations, that we are facing this tsunami of the data, and a lot of them, but finding which are really the valuable indicators for your performance, and that you can use not only externally, but also internally within the company to drive the ESG agenda. It's not always easy.
I will also follow up what you said, because also I worked as a ECG analyst for ECG funds in the past, as you. So, but I would summarize it that we changed the methodology from that we were assessing companies to, for example, UN Global Compact principles or some general frameworks, but then it moved to the approach that you really think about what's the most material for that concrete company. So there was a lot of effort put into the discussion and decision what is material for that company, where the risk is. And then only those areas were assessed and evaluated. So not even the sector issues, but for that concrete investing company.
And maybe Eva, from you as working as a company, because you've recently done an exercise where actually you try to find your own ESG rating as a company. How did you go around?
Yeah, we did that because we knew that, of course, some of the big names, the big rating providers were rating us. But then we came across a really useful sort of aggregate tool that sort of listed all the active sources for our company. And we found, rating providers we've never heard of before. And we were not in active communication with them. We didn't know how they collect the data. We didn't even know what kind of data they actually, collect. And if they are the middleman between, us and the investors, then I believe we should have, insights in that. So we've been, I think, quite active in, approaching a lot of them to find out, what's behind that name, what's in that black box that Helena mentioned. And it has been interesting because I believe that the issue we should mention here definitely is materiality, as was apparent in the previous discussion, talking about minorities in this country could be kind of, a hot topic. So is it really material for us in our, geographical region with our history and so on? It might be material for a rating agency. If you don't know that they are, looking at this data, how do you report it? And at the same time, as I mentioned before, if you report everything, I mean, not only is that not possible, but if you do that, aren't important things falling through the cracks? Are you getting, visibility and clarity of the data that you want? So we decided to focus on just select group. We couldn't really approach everybody because that, I believe it would be counterproductive.
And were there big discrepancies on how you were rated?
Oh, definitely, yeah. It was mentioned on Monday, the article, aggregate confusion. I think, if you haven't read it, do. It explains, the things brilliantly. And we had the same experience, yeah.
There's an upcoming EU regulation trying to address this black box problem with the ESG raters. I think has to do a lot with the transparency, making sure that the methodologies are available and a company like yours can really go into and see where the data is being collected, because it's not always clear. And they're quite resistant. I know the big ones, they're quite resistant in actually publishing. And you kind of get it because that's their know-how. Why would they give away the methodology? But so there's the
one of the most amazing things I've heard in like a personal communication with one analyst of a major rating provider was that he cannot really tell me how they calculate that score or that indicator because it's kind of sort of their internal threshold. Mm-hmm. That was it. So, how do you work with that?
Yeah, and also we often say that ESG data is a bit more forward-looking, unlike the financial returns, but I worked for an ESG provider for a bit, and I know you collect, there's some dynamic elements, so you collect news, but there's also the sustainability reports, which you know how long it takes you to repair one, and by the time they pick it up and rebalance it, it's already outdated, and their investment decisions based on...
It's backward looking,
very much.
You're always looking backwards,
It is, and there was something that was mentioned in the previous panel with regards to screening that was very interesting. And again, Helena touched on this, working in a fund. What are your thoughts on how to integrate sustainability through the tool of screening, especially negative screening, because you sort of limit yourself and you remove these, I guess they're called sin stock, the usual gambling, alcohol, weapons, adult entertainment, and so on. So a lot of companies have a threshold. Companies generating more than 5% revenue from this type of activity are automatically discredited. But we've heard a very good example in the weapons industry, given the invasions. So what are your thoughts as an asset manager and portfolio manager? How do you see this issue?
Yes, well, usually it's not weapons, it's controversial weapons that are banned. But again, there are several strategies to approach your sustainability objectives or just to promote environmental and social characteristics. And RoSIF has very nicely listed or identified 7 different of these strategies. And one of the most popular ones, especially in the US, is the negative screening criteria, which is simply listing a company's affiliation to certain sectors that are considered non-desirable, and then they would be excluded from the universe. And I think if just we're relating to the panelists here, I mean, ČEZ was classically on the exclusion list of many asset managers, simply for the exposure to the coal industry, or the nuclear part is another question usually, which is controversial among investors. It really depends on individual values of investors. But we are missing the point on leveraging on any company that is seeking improvement, any company that is directing its CapEx, its capital expenditure towards sustainable activities. And one approach which is more engaging is to talk to your investee companies. So being an active investor, being a good steward of your assets means that you want to get more involved. And divestment should be the last resort. First, you should try to engage with your companies.
Gege, maybe you could comment, since you worked for a large oil company previously. Is there something you were approached by investors in terms of engagement and stewardship by your...
Maybe not directly to this one, but to the screening question, because I think negative screening, yes, so I think it's controversial from many point of view, or from some points of view. But I think there is another one which is like, and actually this is why I like the EU taxonomy, because I think that, for example, what the EU taxonomy brings is a kind of a positive screening, right? Because it's based on a similar, but maybe Helena wouldn't agree with me, approach that lets, take the activities which are positive, which we think they have a positive impact. And of course, if we think right or wrong, that's another question. And then let's try to somehow motivate the financial community to invest in them. And I think that, how to say, that's a kind of a thinking that was very much missing from ESG even many years ago, because the simple ESG, like risk-based approach, left a big room for mixing up strategies and operational impacts. But I think that this thinking that the EU taxonomy brings in can have a positive impact, in my point of view, in reporting. But I don't know if anybody agrees.
I agree with that the taxonomy regulation is inclined to the positive screening. So it lists the activities that are considered sustainable. But there is one big ambiguation left in the regulation, and it is that it's left up to the asset managers to decide how they should approach measurement and identifying sustainability. And ESMA came out yesterday with a clarification, a Q&A, and it left a lot of questions still open. It is up to the investors to decide on a lot of questions, which means that the industry will start to create own approaches, and they will start looking for common best practices. So it is left up to the industry. For example, one important question that is interesting for all of us: how do you handle short selling positions? Yeah, short sales. Does that offset your, let's say, from out of your principal adverse impact, some of your greenhouse gas emission numbers? Does it offset? So we've got some guidance on that to a certain extent it does offset, but a lot of the questions remain open, and I think we will be all looking at each other for best practice. Maybe just to comment on that, I guess the screening part of the integration is often seen as the moral, right? And the ESG, it's more as a risk-based. So how mixing, it's sometimes not very clear what I deem to be moral, and then it gets mixed with the whole concept of ESG, which is a bit more risk-based framework. But I think one of the questions, going back to some of the ESG data providers, there's so many. I don't know, how do you even navigate yourself in picking the right one? Have you tested the data, or how do you select an ESG data provider for your investment process? I don't know who wants to help. Helena or Janka, I don't know if you had clients you were helping to pick the right providers for data. No. Well, ESG data providers are, one aspect is the quality of the work they do. The other one is the coverage. So how many companies that they cover which are relevant to your investment universe. And the third thing is the cost of their services, finally. So, I mean, it is a quite important aspect as well. Do you rely more on the costlier third-party services, or do you internally develop this capacity or capability? So this is one important topic. Interesting. But if I may, I want to bring up one conflict that I have, and maybe to hear the opinion of the panelists here, is that my problem with the ESG ratings is that they mix the two aspects. You've mentioned the impact on the company, so how does climate risk impact your operations? And I think this is something the companies can relate to. It impacts their cash flow statements, hence the valuations in a very direct way. And the other direction of impact is how do they impact environment and society, and that's an externality. And in economics, externalities get priced in if there is a mechanism for that. So mixing the two is not very ideal. Investors usually would have a goal. What is the portion they want to focus on? And the sense I got from ESG ratings is that pretty much the two are a little bit mixed up. Would anyone like to comment? This is, I guess, the double materiality. There was a study that says even consumers are confused. If you say ESG, they think it's the impact of the company on the environment, but we see the other way around traditionally.
Yes, from my side, I can just agree, and this is what I kind of already mentioned. Maybe I wouldn't use these words, but I think you are the professional, so probably the words that you are using are the correct ones. I always say that, mixing strategy and risk is not healthy in the ESG ratings, and I think that this is the reason of this whole mix and unclarity in all the ESG rating results, that there is no clear methodology for separating this. And I'm really hopeful that there will be more clarity on this. And again, as I mentioned, for example, for me, the EU taxonomy seems to be a good direction into this one. Like introducing this approach that let's take a look first at what is the main impact of the company, what is the main activity of the company, and then, or actually just one activity or one CapEx project, whatever we want to call. And then when we clarified whether it is positive or negative, then take a look at the risk profile of that activity, because it can still have some risks or additional negative impacts because of which we do not want to go with it. But otherwise, the first step is to decide whether it is good direction or bad direction.
Maybe a short comment, what you said, Paula, that consumers do not perceive this, that also the companies are impacted by certain issues like climate change and so on. So I think that's also the opportunity now for companies to explain that, because of course it's one of the requirements of ESRS to explain this, why it's relevant, why they care. And I read during my career many reports, and I have to say that companies really are quite weak in that. So because they don't want, sometimes they, I think, don't even think about that. That's why they don't describe it. But you can really see when you are reading the report where a company is really explaining, disclosing also the business model, and they are explaining and understanding that this issue is really critical for them. They can have new products, it's opportunity, but also the whole business can be ruined, or because of this. So it's really now also opportunity for companies to disclose it in their reports and to tell that story that consumers will understand, and that will also bring or make consumers more, that they will believe in that, because like when you are companies saying like, okay, we care, we are planting the trees, but okay, but when they will really explain in depth like that their business is really in risk because of those issues, those actions will be more trustworthy or uveritelné. Yeah.
Yeah. And when it comes to this reporting, do you reckon you guys are from the corporates? Do companies, do they disclose? Do you reckon the pressure comes from the EU, as we said, from the need to actually disclose? Or are there companies, I know there's some Nordic companies, they've been doing this for a while, and they just want to appeal maybe to new markets, to new consumers, and so where do you see that? Or maybe what's your reason to start with
we
reporting?
try to have all our bases covered, basically. So we implemented several frameworks that we use for our reporting. There's GRI, there is SASB, because we expect the ISSB to launch their global reporting standards. We published, last year actually, we published our first TCFD report, which is not a legal requirement. In the UK, you have to, here you don't, but again, we did that sort of reporting exercise precisely because we wanted to see if we can sort of look into the climate risks and see where we are going, how aligned things are with the ESG strategy of the whole company. Worked out quite well. The alignment is good. So there is a lot of things that we try to do to like not be left hanging. To have answers ready if someone asks. Yeah, I'm not saying it's perfect. We're still trying to get there. It's never, And rating is a double-edged sword in this, because sometimes, as we talked about it, that the different rating providers have different methodologies, and sometimes even the methodology is kind of unclear. It doesn't make sense to try to please everybody, because then you would just that would be just useless and very costly, very very complex thing to do. Probably wouldn't work anyway. So we try to focus on the material issues. Obviously, we are a utility, so there is a lot of connected with the energy transition, decarbonization, things like that. And in the social and governance, there are KPIs set, there are targets, so we report on them. We try not to get distracted, let's say, with some stuff, because you can't please everybody, and asking about indigenous population in this country, again, that's a question that even if we had like a beautiful policy, is it going to really help investor in their decisions? So you have to balance things, definitely.
And maybe, Georgi, would you like to comment as well? I know SAP has a very good, quite in-depth reporting when it comes to sustainability, and I assume you've done this work prior to all of this regulation coming in. Do you feel more pressure with all the EU regulation, or are you pretty much also ready and for what's coming?
Yes, I think the short answer is a clear yes. So I think the regulation is important, and it's a good baseline, and if it's a pressure, then it's not necessarily a problem unless it's an unnecessary burden. So I think it has to be balanced very well to still keep it reasonable. This is one thing. Also, I think that the role of investors, analysts, and sustainable finance as a topic in general, I see it as very positive, because I think that in the last 10 years, the financial community gave the pressure to the sustainability that was needed after the 2008 financial crisis to move it out from, from a kind of a ditch, what I always say, but it was in a, seeking the new direction. But also, I think, reporting based on the regulations and reporting just to the analysts or rating agencies, in my view, cannot be the end goal or the final result. And I think that sustainability reporting has several other necessary, important elements, which maybe just a few companies are doing so far, but it's important. And just let me give 2 examples, and I will try to be quick here. One, which is SAP internal. So SAP has I think a sustainability report, an external one with a good content, even though we were even joking a bit what is changing and what is not. So the data is yes and the text is not, which I don't see a problem, because I think you just have to reflect the annual changes in the sustainability report. But SAP's most detailed dashboard about sustainability is always for the employees, about several topics, but just one example, which is accessible to all SAP employees, is that every 2 years, I think there is an internal survey about commuting, because, commuting related, as ridiculous as it might be for ČEZ, this is an impact, but yes, for SAP, this is some kind of an impact. And there is a huge breakdown for each and every site of globally, what is the related emission. So I think this is an important communication, even though this is not required by any kind of agencies. And my bigger comment, which relates to the consumer. So I think if we think about ESG reporting, reporting a GHG value once per year, for me, this cannot be more than just an interim step. So what I think is missing really from sustainability reporting is that if I go to the shop, just to any kind of shop, and I see 2 products, I only see one value today about them, which is the price, right? And this price includes a lot of factors, so it has a huge calculation in the background, but it doesn't include everything. So for example, just to use one example, if I go and want to buy a really bio apple, which is chemical-free, whatever, it will be even 1-2 euro nowadays, right? And I can get for the same price even an avocado or a mango, which is not locally sourced like the apple, but it is coming from South America, whatever. But still the only thing that I see is the price. And I think where sustainability should really get is that to every day and in every transaction to be able to give the information about sustainability to the consumers, not only the everyday consumers, but also to business consumers, that whenever they make a decision, they can see the sustainability impact, because the price might be the same for the apple and for the avocado, but maybe the carbon footprint is, 15 grams for the apple and 150 for the avocado. And in that position, the consumers would really be able to decide. And actually, I think this will be an even bigger step for the companies. It is very long term. It is not only related to the regulations. I even miss a bit this part, but this transactional somehow sustainability or carbon accounting is very much needed, and I think this can be in reporting an end result, for example. And actually, by the way, this is what is also the vision of SAP, to be able to give this level of granularity in reporting.
Let me add a comment to that, and you're absolutely right. If transparency is key here, because if we have the right information, consumers are able to decide. And the same thing applies for the finance industry. The SFDR regulation, which is about disclosure, and it really doesn't have any qualitative or quantitative metric. How far should we go? To what extent should we be promoting or having sustainability objectives? It's just about being transparent. But still, what company doesn't feel the necessity to improve on its performance if in its SFDR reporting it finds out that it's quite lagging against its peers? So there is a kind of pressure. If you're transparent about it, then you'll be inclined to improve on it and deal with it. And once you have those numbers in front of you, that's instigating some kind of management of that. And that brings us to another issue, is that the bias that the smaller companies are suffering from. I've looked at a lot of data from global companies, and I would estimate that it's right around the size of 10 billion USD of market cap is where I would consider below that companies ultimately having lower ESG performance just because of the size effect. And I've engaged with a company that is about that size. It's a mid-sized company, and looking at what's relevant for them in this region, you see that ESG raters were very strict on a few criteria which were not very relevant to that company. So if we take it a step further, I think investors will be, we're also in a progress in this regard, but also understanding what are the relevant points, and that's why it's important to have your own values reflected in your own ratings.
Do you expect this to maybe change with the regulation coming in? If there's the size bias when it comes to the ratings, do you think that the regulation will help to address these gaps?
No, I think it's with the investors to understand what is the size discount embedded into the ESG ratings. The other dimension, apart from size, is looking at emerging markets versus developed markets. And the latest research directions that we're doing is looking at global data and doing separate results and testings for EM versus DM market players. And there is a split. They are playing in two separate leagues. So how should global investors assess the much lower ratings of emerging market companies? We cannot just chase around the highest performer companies. There are simply not enough investment targets for the amount of ESG money, if you want to call it this way. So the approach is to work together with those companies that have the awareness and are willing to improve and enhance in a meaningful way.
It's interesting. I've heard the same about state-owned companies. So Gazprom, PetroChina, Petrobras would have normally very high ESG rating because they have large departments and resources to report very well. They tick, if it's just a tick box exercise for the rating, they score very well. But we have less than, we have around 3 minutes left. I was wondering if there are any questions from the audience or if we can get the Slido up. I'm aware that we're almost there at the end of the day, so. No? Yep, we have one question here.
Thank you for the honest conversation. The question that I had is related to a research that we recently did at RoSIF in Romania, trying to figure out how well the listed companies disclose matters related to ESG, or how bad they disclose, as we concluded. Even the ones that do disclose their emissions, their waste, etc., they don't seem to be setting a clear and transparent target around performing better, around reducing, publicly communicated. So I was wondering, what are all these ratings valuable for at the end of the day if they don't change the behavior inside the company? If the board doesn't take a decision, okay, so next year we're going to do 3% lower or 3% higher, whatever. It looks to me, at least the data that we've monitored in an earlier stage market than Central Europe, Romania, is that yes, disclosure is improving, but it's not changing target setting at the level of the company. I don't know if Central Europe's experience is different.
From my experience and the work we were doing in ESG Fund, the goal setting was always calculated. That was really assessed and taking into consideration into the final summary evaluation. So yes, it was considered whether it's long-term or short-term goals, how tangible they are, and so on. So I think that most rating agencies work with that as that.
I think it's regulation also in the EU, the one that you mentioned, is that non-financial performance indicators are part of the remuneration package and the performance measurement of management. So that's one incentive. The other thing is that we have to be aware that ESG performance takes time. So engaging with a company is usually set 2 to 3 years until you see any results. So let's hope your initiative with the Romanian companies will be fruitful in due time.
But I guess also, would you maybe, if you're an investor and you have SFDR Article 9 fund, you have to year on year lower emissions and so on. Would you say that also the investors of the big funds do put some pressure and engage with their investee companies to do so? Have you ever experienced that, Eva?
We actually did this, yeah, and what really resonated among, let's say, the investor community interested in us was when we had the SBTi targets validated. The near term, long term, or the net zero, it's supposed to happen, I think, this June, July. It's always, a long time when you send in your submission before you actually get your date of target validation, because it was like a really, really long waiting list. But the near term or the near targets were validated last year, and that got a lot of attention. Yeah. So I think that this, because it's like in a way it is like a monopoly, the SBTi, but on the other hand, it's supposed to be science-based. Maybe it has more credibility than different rating agencies. Maybe it's hard to really read our targets through ratings. So I guess that SBTi was a way to go, and it really resonated. Yeah.
Perfect. Would anyone else like to comment further? I have some final remarks because we are running out of time. And networking is starting soon, so no. I guess I would then close the session. Thank you very much. Please join me in thanking our panel for powering through.
And I thank you, Paula, for the moderation as well. And maybe just to wrap up the day number 4. So I do hope you have learned new things. You have met some interesting people. And today we have heard about the EU Green Deal and how to operationalize and how to put the Green Deal into practice. Then we went to CBAM and sustainability models, sustainability integration in business models. We have heard about the real estate and how ESG is integrated in real estate. And then we had a very interesting discussion about the stock exchanges. And we closed with one of the most important topics, or one of the most discussed topics, which is sustainability performance and measuring of ESG performance. So one more day to go. Tomorrow we'll be focusing on sustainability and innovation, which is a very interesting topic. So you are still very much invited. And I think that's pretty much it for today. So I wish you a very nice rest of the day, and hopefully see you tomorrow. Bye.